Good morning and welcome to the ACUITY RM Group PLC Final Results Investor Presentation. Throughout this quarter presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to the Executive Chairman, Angus Forrest. Good morning to you, sir.
Thank you very much, Alessandro. I'm not executive chairman, I'm now chairman, and I'm really going to introduce David Rajakovic, who became the chief executive at the end of last year and has done I think, a sterling job over the last 6 months. And with that, here is David.
Thank you, Angus. Welcome to this presentation where I'll hope to explain why this is an inflection point for ACUITY risk management. And before I get started on why I believe this is an inflection point for us, I'll take a brief moment to explain what it is we do. So at ACUITY Risk Management, our flagship product is Stream. What Stream does is it allows CISOs so that's Chief Information Security Officers, to monitor their cyber risk. It also allows them to achieve valuable certifications and comply with regulations. And finally, it allows them to conduct third-party risk management, so managing their suppliers' cyber risk as well. First, let's begin with the investment case. This is a high-level overview of why you should be excited to invest in ACUITY. So it's very difficult to open the business news today and not see some sort of cyber-related attack. There's been many examples in the most recent past, Marks and Spencer being one of the biggest. Therefore, we are operating in a large and growing market. I believe ACUITY is well positioned to take advantage of this market because cybersecurity is no longer a checklist problem. You can no longer go down a list of controls on a spreadsheet and tick the box that you've done them. And what Stream allows you to do is to actually monitor that cyber risk in real time on an ongoing basis. Why Stream and why ACUITY? We are an established business. We've got a proven product with global customers. We work in some of the most secure environments in the world. And therefore, we have that demonstrated credibility and trust with our clients that will allow us to even win further business. So we've started to grow the top line. We've got forward contracted revenue of 3.4 million, which is up from 2.9. More importantly, we've got a rejuvenated business proposition. So meaning we are now focused completely on cyber risk versus enterprise risk. So we're very much staying where we are the experts and that we can demonstrate our expertise. So we've got a new management team headed by myself. We've got a new go-to-market strategy that will be much more capital efficient because it's taking advantage of all the advancements in AI to target buyers who are actually looking to buy products like ours and hit them with messages that will resonate with them. Probably the most important factor is the relaunch of Stream. So we've got a whole new product that is much more easy to use, that is easier to integrate in a client's IT architecture, and that is much faster to implement. So lower costs associated with implementation, both for us and for our partners. There's significant room for expansion. So we are working diligently to expand our partner network and find partners who are committed to achieving, success for themselves and also success for us. So I think the key in this market is distribution. And part of the way we're achieving that is through alliance partners. So let me go through a bit about our solution. So we've got what we allow CISOs to do is to reduce their security risk. Their objectives are all about reducing security risk, maintaining compliance, and aligning that security with the business. So it's not just enough to say that there is a critical risk. They want to talk about, what does that mean? How are we exposed financially, for instance? So Stream allows CISOs to meet all of those objectives. We provide a single pane of glass where we are monitoring the entire attack surface area that the organization face, one that's growing and becoming more complex by the day. And we are taking all these various alerts from all the different systems that CISOs need to monitor, and we're consolidating that into one view so that they can see where their priorities lie and what they need to be taken care of today and tomorrow, and what can wait until, for instance, months down the line. Some of our key capabilities that allow us to do this, I won't go through all of them, but I will point out that there are other companies that will allow you to just simply achieve compliance or achieve a certification such as ISO 27001. We, of course, allow companies to achieve those certifications and gain compliance with regulations. But then we can take them on a journey that allows them to actually become more mature and be better positioned to combat their cyber risk. Another way in which we are uniquely positioned to grow is the trend toward cyber risk quantification in financial terms. So boards don't just want to see that there are 15 critical risks outstanding. They want to know what that means in financial terms. And that's where Stream is uniquely positioned to allow our clients to do that. So the idea is, from a business standpoint, is we get them in on an entry level to allow them to comply with various regulations and gain certifications. But then we're able to upsell them on additional tiers that will make them more cyber secure. We can handle both the mid-market. So we're able to, in the mid-market, companies are generally looking to just achieve those certifications, and we can help them do that rapidly and cost effectively. We can also deal with the large enterprise clients that want that monitoring of real-time threat data and monitoring of their real-time controls and level of control that has been implemented in their organization, and have that single pane of glass telling them where their priority risks lie and what actions they need to take today to make themselves more secure. So we can handle a very broad spectrum, and we're able to have different pricing tiers that allow us to capture all the value we're delivering from enterprise clients while also delivering a cost-effective solution for more mid-market clients. So our ideal buyers, and these will be generally achieved through partners, because partners are uniquely positioned to get in with large enterprise clients when at the very beginning, when they're just deciding what it is they need, and when they're deciding what frameworks they need to, what frameworks and what regulations they need to comply with. So these are 5,000 plus employee organizations with large annual budgets. We're best positioned to serve clients that are in highly regulated industries. So defense, we're very strong. Healthcare, we have some foothold there, as well as finance and banking and others. These have many different regulatory requirements, and in Stream, one of the best things about what we do is we're able to configure our product Stream to handle pretty much any framework or regulation that exists in the world. What are they looking for? They're looking for the software that is the most secure, that has the most credibility and backing, and especially through our work through the UK government, we can offer that credibility and we can provide that level of trust for organizations beyond just government and defense, which is exactly what we're working on now, especially through partners. In terms of progress, we've basically been running since the beginning of this year, and there's one of the most major developments that we've achieved is that next-gen stream has launched. And I mentioned it earlier, but I'll mention again, the ease of use and intuitiveness of next-gen stream is truly a step change for us. And that will manifest itself not only in more new business sales, but it will also lower our costs in terms of implementation. It will not only lower our costs, but lower the barriers to actually start using our product. And that will not only lower our costs, but also improve our partners' ability to deliver the solution without needing for us to have a great deal of manual effort. So this will improve our operating leverage. The go-to-market infrastructure. So we've near the beginning of this year, we started putting in place the foundation for a new go-to-market strategy that is AI native. So this is where we're finding that buyer intent wherever it exists on the web, and we're targeting those people who have demonstrated buyer intent with messages that are personalized to that person and their role. That is just starting to take effect and will have a big impact, especially in Q3 and Q4 of this year. Another very key element is that our partner program has been restructured. So we've taken great pains to make sure that we are delivering value for our partners, and we are making it very attractive for them to resell us and implement even our solution. And that's something that we believe will be a huge amount of will represent a huge amount of growth into the future. We've got a dedicated alliance partner lead who's out every day looking for those competitive or those committed partners, and we only need a handful. We actually only need 2 or 3 to make a very large impact. But once those 2 or 3 are up and running, we're building a very extendable model such that other partners, if they want to jump on board and be committed, can easily get up and running, and therefore the potential impact is huge. So I think I mentioned earlier in terms of our go-to-market strategy, our first AI-generated campaigns are live and in progress now. So that has been kicked off, and we should see that the impact and the results in the months ahead. Importantly, we've changed the culture of the organization. It's very much a performance culture. We're very much focused. So now our focus is on cybersecurity versus a wider enterprise focus. And everybody understands what they need to do, is motivated, and it is out there executing. And at this point, I will hand it over to Angus to talk through a couple slides on our finances from 2024.
Thank you, David. Here we see the audited accounts for 2024 with comparatives at 2023. As you've heard from David, the management focus is now to drive revenue growth. In 2024, we didn't have the growth that we had hoped for, partly because we diverted into enterprise risk, and as David has told you, cybersecurity is where our strength is and where the growth really is for this business. So I expect to see significant growth in revenues next year. You may say about the overheads seem to have raised significantly between 23 and 24, but I want to draw your attention to the fact that 23 was a 8-month period, whereas 24 is a 12-month period. So they didn't really increase significantly on a average month basis, but since David joined, he has made significant inroad into the costs and reduced the costs very significantly, with further cost savings to come. So remuneration, payroll, which is our biggest cost, has been significantly improved already this year and will, by the end of the year, show very significant savings. And our other overheads, such as our office, our contracts with other software companies, and so on, that is reducing as we get to the end of contracts which are already in place. So we did make a loss. It wasn't that much more than 23, in fact, significantly. It was about the same, despite there being a longer period. But our objectives are improving the financial performance and particularly cash positive trading going forward from here. So can I have the next slide? We have a reasonably strong balance sheet. We have significant assets. Debtors and cash were strong at the year end, and we don't have that much in payable liabilities. We do have one area which is a significant liability, and that is our deferred revenues. So when we take an order, we are paid up front, and then we have to deliver typically for a 12-month period, and we only take revenues as that contract is delivered. So that means that we are stronger in cash terms than we are in revenue terms, which makes it easier to be cash positive trading than it is profitable trading. But we're working on both of those and expect to see massive improvements in 2025. I think hand back to David now.
Sure. Thank you, Angus. So yeah, I'll just mention the team. So I've taken over as CEO in the latter half of December this past year. Yeah, it's been a whirlwind in terms of increasing our go-to-market engine, developing the new product, and in some cases making ourselves more capital efficient. Adam Freeman is our CTO. He's a very strong CTO, and in fact, in a matter of weeks, was able to launch a new product that is an extension of our stream, and that's the vendor management hub. So this is a piece of software that will allow us to manage third-party risk more effectively, and help I'd say the tactical implementation of third-party risk management, whereas Stream provides the bigger picture in terms of third-party risk management. So he was able to launch that in a matter of weeks. He's massively improved our capability to develop new features and new functions, as well as launch new products. So that bodes very well for the future as we adapt and change to shifting market conditions and demands. Richard Mayall is a world-class expert in terms of cyber GRC. He is able to speak with confidence and guide clients in a way that that provides a solution to their problems, whatever that problem may be, whether it's compliance, whether it's achieving a certification, or more importantly, making yourselves more secure. And Richard was a co-founder of the business and remains highly involved today, and is truly a subject matter expert. And Kate is our strong CFO, who just did a great job getting our accounts together, and is providing the financial model moving forward into the future. That's what I'll say about the team. If I just bring it all back together in terms of the summary, so 2024 was a time of consolidation. It was a time where the foundation was laid and we began work on the new Stream product, which we're now going to reap the benefits of. And more importantly, looking forward, we've got a completely rejuvenated business, new management team, new way of working, and a renewed focus on cybersecurity, which is a very much a growing market and becoming a larger and larger problem for the world's largest organizations, to the point where boards are now asking, how exposed financially are we? And Stream is very well positioned to capture that new demand because of a number of things, including the ability to quantify risk in financial terms, to provide boards the reporting that they want to understand that their organization is feeling secure, is secure in this difficult environment they now face. Our new capital efficient, AI driven go to market strategy is beginning to have an impact, and we will see that impact through the rest of the year. And by far the biggest of all of these is that the relaunch of Stream and the newly designed product that is much easier to use, much easier to implement, both for us and also for our partners, and with an intuitiveness and look and feel that makes it attractive to potential new clients. We've got a bold vision to become the real-time single pane of glass command center for the world's largest organizations to understand where their biggest external threats are and actually combat them in real time. And I will talk more in future investor meet companies and other forums about the bold vision that we have. But suffice it to say, it is a very exciting proposition and something that will absolutely be needed in the months and even years ahead. We've got the ability to expand very quickly, and the quick and sustainable wins will be through the right partners, so the right alliance partners. So we feel like we have some already that will then begin to bear fruit in the quarters ahead. And there's some that even have yet to be developed that will sustain our growth, our rapid growth, even into years ahead. So that's the summary. I'm very positive and enthusiastic in terms of where our business is headed. And I hope that this presentation has delivered as much enthusiasm as I genuinely have about this business. So yeah, I think now we will turn it over to you to ask questions, and we'll have our Q&A session. Thank you.
Perfect. Well, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions, and you can do so just by using the Q&A tab that's situated on the top right-hand corner of your screens. But just while the company take a few moments to review the questions that have been submitted today, I'd like to remind you that recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboards. As you can see, we have received a number of questions, both pre-submitted and throughout today's live event. And Angus, if I could hand over to you to share the Q&A, that'd be great, and then I'll pick up from you at the end.
Okay, thank you. The first question we sort of covered, which is it is why did the costs rise so much? The answer being that 2023 was an 8-month period, 2024 was a 12-month period, and the cost didn't really rise on a monthly basis. So the next question is, in the light of the recent issue of equity at 1p, why is the holding in KCR REIT not being disposed of, which would have avoided the significant dilution of shareholders? This holding is worth circa £250,000. Answer, that is a good question. ACUITY owns 2.5 million shares, but there is no real market for such volume, and we couldn't sell them at that price at all. What we have been doing is taking actions to try to realise the shares at a proper value. The current share price, circa 11 pence, net asset value is 30 pence. We are party to an action group calling for a general meeting. I think it's on the 14th of July, but there is a series of actions planned to try and get real value out of KCR REIT and for us to be able to realise the shares. One thing which we did do was to arrange for a broker option, which would allow existing shareholders to participate on the same terms as the placees, and that was available to all shareholders when we did the placing in May. So we're not ignoring our existing shareholders, and we would like to sell at KCR REIT, but we are making every effort to do so at a proper price. So next question. Payroll represents approximately 66% of costs. Is that necessary? Is it sustainable, particularly in view of the government's increases in payroll taxes? Can I ask David to answer that one?
Sure. So yeah, we are mitigating the impact of payroll costs. So in most software businesses, payroll is the most significant cost that you face. The actual cost of goods sold is generally quite low. Really, it's the servers required to deliver that, and customer support is in there. But payroll is generally a larger cost. What we've done is we've used some strategic outsourcing to lower those payroll costs, as well as just in general making the organization more lean. I mentioned the AI-driven go-to-market strategy, so that's one example where we can become more lean. And yeah, so we are always looking for ways to reduce our the payroll costs. There will be certain elements that will need to remain within the core of the organization, but where we can use outsourcing to kind of mitigate the increase in payroll taxes, yeah, we absolutely will do so. So yeah, we are looking to reshape the organization. We have reshaped the organization to make it more lean and more capital efficient, while still maintaining the ability to grow. And I believe we've done that.
Okay. Question about David, actually. Would David like to tell us about himself and his background?
Sure. So go through the whirlwind tour of this one. I am an ex-Army officer, very much in tune with our government and defense clients that we have. So generally speak the same language and understand where they're coming from. In terms of my most recent experience, so it has been co-founding a very successful procurement and supply chain e-learning business, which we grew from a couple 100,000 in revenue when I first joined to going through 2 highly successful private equity exits, ultimately becoming CEO of that company before ultimately deciding to do something else. So this is ACUITY is perfect because it actually is further ahead than where we were when we started that previous business. So the previous business was Skill Dynamics. And ACUITY already had a stronger product. It already had a stronger client base. And I'm looking to achieve that same sort of level of success here at ACUITY that I have in previous stops. So that's a bit about my relevant background. I won't bore you to tears with the whole life story.
Okay, thank you. How does the shift to a more automated AI platform improve ACUITY's gross margins and recurring revenue visibility over the next 12 to 24 months?
Yeah, well, it certainly improves our EBITDA outlook because the whole idea with the sales funnel is that you want to be generating leads. So these days, buyers educate themselves to a larger extent before they even speak to a salesperson. So this automated AI platform will allow us to build a large amount of quality, and that's the key, quality content that will provide buyers with the assurance that we can meet their needs and that first of all, that we understand their problem, and then that we can meet their needs. And buyers want to do that even before they speak to a salesperson. So that right there makes things much more cost effective. So we want to have a very strong top of the funnel AI generated content that brings people into the funnel, and we only have expensive salespeople that are connecting the dots once they are already convinced that we generally can meet their needs. So that improves our profitability now, and certainly will make it much more scalable at a reasonable cost, therefore providing greater operating leverage as we grow. We will see there will be greater recurring revenue because we will get better at understanding our clients' needs and being able to react to it. That's not only with the go-to-market strategy, but that's also impacted by our greater capability now of building new products and of adjusting the products that we have much faster. And that will improve our retention rate, and therefore that will improve the outlook in terms of revenue visibility over the next coming years as we improve that retention rate, and also have the ability to attract new clients and only use expensive salespeople to do the kind of closing of the deal versus having them attempt to generate leads on their own.
What feedback have you had from existing and potential clients about the new product?
Yeah, they absolutely love it. So we've shown to a number of prospects and also current clients, and there's a recognition out there that it is a huge step change from previous versions. So everybody that knew how to use the previous version of Stream was happy with it because it was very configurable. It did what they needed it to do, but there was a learning curve to get to that point. And with the new Stream product and with our new vendor management hub product, it is very much, you can open it up and you can start using it and gaining value very quickly. And that learning curve has been reduced sharply with this new product. So it's had great feedback, and we look forward to showing that shows up in the results into the next coming quarters.
Is guidance still for the company to be cash flow positive in Q3 and Q4 of 2025? The company has said its target is to become cash flow positive before the end of the year. And I think I can reiterate that absolutely the board of directors and David is focused on making the business financially independent and particularly cash flow positive by the end of this year. So the answer is that's our target, and we seem to be on target to do that. So next question, which industry sectors is ACUITY strongest in, and which are you most excited about? David?
Sure. The industry that we're strongest in is government and defense. That is a stable source of revenue for us. I am optimistic about our chances to even grow within that space, but I also recognize that we need to diversify into other sectors as well. So a couple of examples that I'm most excited about are the insurance sector, because cybersecurity insurance is a relatively new offering, and certain insurance companies don't yet have an offering, but I'm sure in the months and years ahead they are planning to do so, because it's such a growing market, and it just seems like an obvious way to expand their business. And with that, they're going to need the ability to quantify risk in financial terms. And right now, there are cybersecurity insurance companies that are doing this, but there are others that are taking an approach that is not as scientifically rigorous as it could be, and as it could be if they were to use Stream. So that's one area where I think there's huge opportunity. We've got a solution for them now. We will need to invest in at least to some extent to create a product that is just a no-brainer for cybersecurity insurance companies to use. So that's one area where I'm excited. Also in the pharmaceutical and specifically medical device industry, there's a huge opportunity, because all of these medical devices are now connected to the internet. They're sending data. Companies are behind the curve in terms of cybersecurity for these medical devices. And we're working with a client currently on how to solve this problem, how to understand where which devices hold the most sensitive data, and therefore which need prioritization in terms of like security patches or updating operating systems, et cetera, to make them more secure. So that's another part of our offering that I'm very much excited about our growth potential in.
Okay. David, you mentioned partners. Do we actually have any signed up? And are they actively out there marketing Stream?
Yeah, we do have partners that are signed up and out there actively working on. So CGI is one of them that has historically been a partner. What we've done is strengthen that relationship, make it more attractive for them to resell Stream. They're also strong in government and defense, and therefore we do see opportunities that some of which are starting to arise, and certainly they have over 300 consultants out there who are delivering solutions across many different industries, one important one being government and defense. So we are talking to them about how we make it a no-brainer to actually at least get started with Stream, and that will start to fill the top of our funnel. Not all of those will close deals, but if we can get a significant amount of those, that would be a game changer for us. We've got Soprasteria is out, again, also in government and defense. They're a potential partner. We've got a potential partnership with Leonardo, which is not signed and delivered, but is looking promising. And we've got a number of other smaller consultancies that are out there. One that we've recently signed up that comes to mind is Infodava, based in Romania. So that's a market that we wouldn't necessarily be able to enter very easily ourselves. But we've got the top cybersecurity consultant in Romania that we believe can deliver a significant amount of deals, not quite on the level of CGI, but a significant amount. And they are out there. We're working on one active opportunity now, and they feel like they can bring a number of additional opportunities in the months ahead. So yeah, we do have some. We need to sign up a couple more. We are being very selective about the partners we sign up because we know they need to be committed. Otherwise, if we are just one item on a menu of potential offerings, that won't work. So we're choosing partners that are going to be committed and going out there and selling us. And we're also committed to enabling them. And again, building this content machine has laid the foundation for us being able to enable them further.
Okay. In general terms, how long does it take to convert an initial enterprise lead into an actual signed contract, given some of these large companies can take many months to make a decision?
Yep. So there's the sales cycle. We're working on getting more precise data. What I will tell you is it will be 3 months is for a large deal. 3 months will be the likely minimum. They can take up to 6 months. In some cases, they can take longer. Generally, if you find the right leads with a buyer that feels compelled to take action, then 3 to 6 months is sufficient. And those are the leads that we are now working on getting and basically prioritizing those leads over ones that say, are kind of kicking the tires and exploring the market, those sorts of clients. So I think you'll see that sales cycle come down. You probably will struggle to get it any less than say 3 months or so for the large enterprise deals.
Okay. Who do you see as your main competitors?
Yeah, the main competitors. So U.S.-based companies that help companies with clients with compliance and achieving ISO certification. So Vanta and Scrut are some competitors. In larger deals that involve more enterprise risk and that try to enter into the cyber GRC space. So you'll have Archer, you'll have Metric Stream, you'll have ServiceNow, which we believe our offering is much stronger, and that's based on feedback from clients and prospects. They do have an advantage in terms of their scale, so they're a big IT ticketing company. We have a stronger product for companies that want to get serious about cybersecurity, which we feel more and more will be a key differentiator moving forward as all these cyber attacks are happening and as boards are beginning to ask more and difficult questions.
Okay. There have been statements about cost reductions. Would you like to elaborate? Shall I take this one? The target is to reduce costs by about a third over the 15-month period from the 1st of January 2025 to the 31st of March 2026. A big proportion will be in people, and then there are other significant contracts which we have to wait until they expire. But we're talking about a real reduction in costs and focus on making the business financially successful and that is absolute driver for the management and the board. So I hope that answers that.
Yeah, I think in terms of IT architecture, that those costs are coming down, as well as with people. So with the launch of Stream, that will go to some way of doing that, and also our vendor management hub replacing our Risicon technology, that will also have an impact on costs, on reducing costs going forward.
Okay. Question: do you have an exit strategy, a certain value for the company to be bought out? If so, what that looks like? Well, I think the answer to that is we are in a very exciting sector. There are a number of people who have approached us with, most of them have very deep pockets. I suspect that we will get an offer which we can't refuse in due course. And what David has been explaining about improving the quality of the business by introducing new initiatives and the new product, all of those again really create shareholder value. So are we going to be bought tomorrow? Unlikely. Are we going to be bought in the next 12 months? Probably. We wouldn't get the value that we would hope for in that time. But I think that assuming that we make the progress expected, we will get an offer which is a knockout for us, really, in the next 24, 36 months. New question. Presumably, the huge increase in NATO defence spending is a big opportunity for ACUITY.
Yeah, absolutely. So the increase in defense spending, that there's been a strategic review by the UK government, and there certainly is an emphasis on cybersecurity risks. So we are well positioned to take advantage of that. Right now, we seem to be in a slight holding period, but we expect that within the weeks and months ahead to shift toward, okay, now we have the mandate to go out and invest in improving our cybersecurity, and we expect that to benefit us. There is actually a specific project. It's not necessarily NATO, but it is a cooperation between multiple nations that is looking to improve, and I can't say much about it due to its secret nature. However, there is a project out there that will likely become large, and they want to make sure that it works with the MOD's architecture, which we do provide some services for. So yeah, we see that as a potential area of growth. Absolutely.
Okay. What about Risicon, which you bought last year?
Yeah, so Risicon has provided us a foothold into their clients, and this was one of the reasons that we decided to create the vendor management hub, which is essentially a better and does more things version than Risicon itself. So we've created a whole new product based on taking what was there with Risicon and making it even better and more intuitive. So basically, we've had the opportunity to upsell to some of their clients, so some of which we've converted, and others of which are more in progress. So yeah, that's been a boost for us over the H1 and hopefully into H2.
Okay. I think we're getting towards the end of the questions. Most of them have been dealt with. Otherwise, there's one about David. David, what is your equity holding incentive in ACUITY?
Yeah, so I've bought shares in the market, and I've also participated in the latest placing. I also have some share options, and with additional share options to come. And yeah, I mean, exact numbers I don't have off the top of my head, but it's yeah.
They are on the website.
Yeah.
I think that's the really the last question that we have.
Perfect. Well, Angus, David, thank you very much for answering those questions from investors. And of course, the company can review all the questions submitted today, and we will publish the responses out on the Investor Meet Company platform. But just before redirecting investors, provide you with their feedback, which I know is particularly important to the company. David, could I just ask you for a few closing comments?
Sure. I think 2024 was a year of consolidation. I think 2025 and beyond is highly promising. The biggest takeaways for me are that I'd like you to go away with is the fact that we've got a very capital efficient go-to-market strategy that is up and running and in place. We've got a very much focus on developing partner sales, enabling partners, and ensuring we're getting into those large organizations early in the buying process. And then the final thing would be with the launch of the next gen stream product and also the related vendor management hub, we've got two new products that have been launched onto the market and are ready to drive our growth. So those would be my closing statements. And I would just want to thank everybody for joining the call. And yeah, I look forward to future chats. Thank you.
That's great. Well, thank you once again for updating investors today. Could I please ask investors not to close the session, as you now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. On behalf of the management team of ACUITY RM PLC, we'd like to thank you for attending today's presentation, and good morning to you all.